Hello, YouTube. Jerome Powell just sent out an SOS to the stock market and to everyone in the financial markets. So what we want to try to find out is what he said, why it matters, and why this is so important before Monday. So let's jump straight in and find out exactly what Jerome is saying and why we are looking to save our souls. The most important thing to look at here is just that we now have CPI inflation climbing to the fastest rate since 1982. In addition to that, we also have the U.S. economy growing by the fastest pace since 1984. What does this mean? We are circling back to Paul Volcker era, where we had a runaway inflation at double digits, and the Fed was contemplating raising rates at the same time as fighting a recession. So what does this mean? Jerome Powell is now calling for a closed board meeting on February 14th of 2022. And I want to thank a member in our group, Zach, for sharing this article with me because I did not even know this was happening. So at 11:30 on Monday, February 14th, we're going to find out whether or not Jerome is going to be sending us a love letter or some red for the market. So what will they be discussing? There is one matter to be discussed. It is to review and determination by the Board of Governors for the advance and discount rates to be charged by the Federal Reserve banks. We're going to circle back and explain what this means a little bit later in the video. And if you're enjoying this video at any time, I would really appreciate you smashing the thumbs up and subscribing to the channel as you drop a comment to let me know what you think. Is the stock market currently in an SOS, and why should we matter? Why should we care? So looking forward to here, there's one more thing that came out on February 10th, which came out ahead of the scheduled meeting. And again, just looking at the date here, this was last updated on February 10th. So this is dated February 10th. And we look at something else that came out on the same date, again, from Walter Bloomberg on Twitter. Fed sees market tumult, right? Sharp rise in unemployment in latest stress test scenarios, Wall Street Journal. Annual test to assess 34 banks' ability to withstand hypothetical recession. Keyword there being hypothetical recession. On the same day, they're calling for an emergency meeting, closed door. Again, hopefully you're understanding what's happening here. So I have a couple of articles that I'm pulling through here. This is from an interview on Bloomberg with Mohamed El-Erian, who is a big critic of the Fed. And we also have Larry Summers here. And these two links are shared inside of Slack for our paid members if you want to find out more and watch all these videos. If not, just Google what these say and you should find them on YouTube's. All right, so what I've done, instead of giving you the actual video to watch, is I've taken the most important relevant sections and dropped them into the slide. So Mohamed El-Erian, regarding the emergency meeting and action, what he said is this. He said that if they do it now, the market will sense blood. They will sense that the Fed is panicking. So I don't know that anyone really knew this meeting's been called. And what he's saying here is that if they announce QE tapering, if they announce the end to QE, or they announce an emergency rate hike, he would send, again, what he's saying here is that the market would sense blood. And that could compound with everything else happening in the market right now. Moving forward to a second part here, where he talks about the Fed must do three things right now, immediately. What does he talk about? Regain control of the inflation narrative. Again, why should we trust the models when this is one of the biggest miscalculations on inflation in the history of the Fed? So how can they regain our inflation narrative? How can they regain control of policy narrative? Meaning, what does a soft landing look like, and how are we going to engineer that? As of right now, it looks like it's going to be a crash and burn. So this is really important because the Fed's credibility is now being questioned. Finally, number three, show humility. They were held hostage by views and it had earlier, which means that they were saying transitory. They were talking about all these things that the market just did not believe, but it said, don't fight the Fed. So now they have to tell us why they were wrong, how it's going to change, and why we should listen to them going forward. Jumping forward to Larry Summers here. Again, this is from Wall Street Week, a interview that he did on Friday. And this man has been very predictable, very reliable, and someone whose opinion we should be listening to. Again, taking the most important sections here, putting them into a bullet point format for you to digest. I don't know why people keep being surprised by the numbers. Fed continues to be behind the curve. For all things considered, we beat by 0.1% on the expected CPI number on Thursday. That did not stop the worst two-day decline we've seen since 2020. So what does that mean? People keep being surprised there's inflation, and I don't know why. I think the Fed should have a special meeting right now to end QE. Again, I don't know if Larry actually knew there was going to be a special meeting. So here we're seeing two of the biggest critics from the Fed One saying if they do something, there's going to sense blood in the streets. And again, a guy who used to actually work at the government saying that they should call a special meeting right now to end QE. And the reason why they should do that is because, as we showed before, inflation is now at a 40-year high, and the economy is growing at the fastest pace in 40 years. So why the hell is the Fed printing more money, causing more inflation when we are at the highest levels in the last 40 years? It just doesn't make sense. Finally, Fed could show at last it gets it by having a special meeting and ending QE. So what could this explain? It could explain that as the landscape is changing, and again, being data dependent, they have to change the way they are communicating to the market. A few other notes here that he gave us were: no need to hike rates before March. Need to be more careful with forward guidance. They've been poor. Stay nimble and humble. Doesn't mean making announcements of what you're going to do over the periods of 6 to 12 months in a volatile economy. What could this mean? They could pull an Apple where they pull forward guidance. And that is where the market's going to have to try to guess, figure out what's going on without that guidance. So this really comes down to credibility and humility. So a contrast between El-Erian and Summers shows us that the Fed is kind of in a tough spot. So now I'm going to go through a few more things here. Again, let's just go back. I'm going to show you where these articles come from, and then I have the screenshots to support them. So going to the government's website, the federalreserve.gov, we can see here the emergency meeting being called. On the second page here, I'm just going down to figure out what is the Fed's definition of the discount rate, and again, interest rate change. So it's right here. Encourage you to pause the slide if you want to read it. It basically means the lending. There's 3 different ways the Fed lends. Again, there's loans they receive from the Federal Reserve's lending facility, the discount window. So they offer different types. Again, please read these here if you want to know. There's the primary credit, secondary credit, and seasonal credit. Basically means I'm setting the interest rate. Finally, what I did is I went down to here and I had to look at the December 6th and December 15, 2021 meeting, where inside of here, there are a couple of nuggets of gold we can see in terms of what they are thinking. So I put those slides in here. Crap. I think I forgot to put those ones in. So what I'm going to do is actually go back to here. Let's go back. I apologize. Trying a new format. As you can probably tell, we're doing news only here. So do I actually have those snapped? No, I don't. I probably recorded a little bit early. So let's just go through here. And what I'm going to do is go to the Fed's website and just try to quickly wing this. So again, if you're enjoying the stream, I would really appreciate if you could smash a thumbs up and show Justin, me, the host, a little bit of support. Please and thank you. All right, just want to make sure I'm not missing anything here. And the 2 areas that I wanted to go through are right at the end here. Here we go. So looking right here, I'm looking to the section right here. So looking ahead to 2022, several directors expected continued economic momentum for sustained strong demand, but noted that the emergence of the sickness variant had created some uncertainty in the outlook. After commenting on the risk continued elevated inflation, several directors added that long-term inflation expectations seem to remain stable. So what does this mean? Again, they were expecting some turbulence or uncertainty in the economy based on the potential for this new variant. Ended up being a nothing burger. What do we have? Fastest GDP growth in 40 years. And that inflation also stubbornly high. Does not seem transitory at all. So what does this mean? The Fed has to act, and they got to do it fast. So jumping forward to the next section here, it's very simple. We're looking down to here where, let me just make sure I got it. So again, you can pause the slide here. All 12 directors voted in favor of maintaining the current rate, basically 0.25. However, right here, in light of the ongoing inflation pressures and the rapid improvement in the labor market, a number of directors noted that it might soon be appropriate to begin a process of removing accommodation. So what does that mean? The Fed is basically telling you that the data they used in December and January has now notably shifted. So what does that mean? The outcome of this meeting is going to be tremendously important. Not only that, this is going to be a jam-packed FOMC and Fed week here. So looking at the 14th, which is going to be Monday, we got that special FOMC meeting, the emergency meeting. On Tuesday, we got US PPI, or Producer Price Index, which is a leading indicator for CPI, the Fed's favorite gauge of inflation. And it's going to be a big clue. On Wednesday, we have FOMC meeting minutes going back to January. So, in addition to that, we also have on Thursday and Friday, we have Fed speakers. So let's find out exactly what that means. And then to wrap it all up, we got the Olympics ending on the 20th. So looking through here, on Wednesday, we have the FOMC meeting minutes. And we have to keep in mind that if these minutes are different than what we're going to be hearing at the special meeting is going to trump these meeting minutes. Why? Incoming data means they got to change now. So on Wednesday, very important. On Thursday, we got Bullard and Mester speaking. As a reminder, James Bullard is the person who tanked the stock market by nearly 2% on Thursday when he said he was in favor of a 0.5% hike in March. Likely going to be discussed at the meeting on Monday. And then we got Mester George, also a hawk, speaking at 4 o'clock here as the market closes on Thursday. And then on Friday, we got Bullard speaking again. Oops, no, sorry. That's a duplicate here. And then on Friday, we got Waller and Williams speaking. So Waller is the hawk and Williams is the dove. Let's see what happens. Finally, what does this all mean? We got a few more highly anticipated earnings this week, but in my opinion, these do not matter at all. It is going to all be about the Fed. Some companies I'll be watching include Roblox, Airbnb, Shopify, Nvidia, Roku, and Walmart. But for the most part, I think the bulk of the earnings momentum, direction, and notable events have already happened, meaning we know what's happening for companies, or they're seeing huge inflation pressure, and it's not going to stop. A few news articles here to wrap it up. We can note here that, again, U.S. sees China watching Ukraine crisis as a proxy for Taiwan. I don't want to get into what this all means. You should know it by now. Just reading you the headlines, you can see that we are now getting into crisis mode. Moving forward to here, the era of P-word restrictions is fast coming to an end. Politicians risk missing lessons in the rush for the exit. In addition to that, the P-word era of dirt cheap credit is ending as the Fed prepares to hike. Whoa, this is not good. So second thing here, again, we're looking here at high-grade corporate bond yields are quickly rising from the sickness lows. What does that mean? We're at nearly 3%. The 10-year note is now breached that 2% barrier, and high-yield bonds are now at 3%. A dramatic move off roughly the 1.8, 1.9 base that we formed in mid-2021. And then looking to here, stock market quest to stand firm against everything comes apart. S&P 500 falls for the first week in 3 amid Fed and Ukraine angst. Retreat is bad news for bulls who just poured money into stocks. And then finally here, we got Goldman lowers official S&P 500 forecast and also evaluates what a recession would do to stocks. We're hearing the word recession come up frequently from Goldman Sachs, from the Fed. And I think what's important this next week is that we are very, very aware that every single day has important data, notably from the Fed, and you cannot ignore this. I am trying to set a warning that you need to hear before Monday. Please also note that this is a new video format where we're going to break out the weekend deep dive into 2 videos, one being the news and one being the news and key dates section, and the second one being the charts and options. If you've enjoyed the stream, I encourage you to subscribe to the channel and watch the next video coming up. Thank you again for watching, and I wish you all the best of luck this week. Thank you.